Destination Africa, brought to you by Standard Bank.
Welcome back. You're watching Destination Africa, and still in discussion with me today is Sven Richter, MD of Renaissance Asset Management, Brian Richardson, MD of Wizard Cell Phone Banking, and joining us now from Nairobi, Kenya is Daniel Connolly, East Africa's CEO at Citibank. We're putting the spotlight on Africa's banking industry. And Brian, let's pick up with you because we've explored a bit, and I have to emphasize a bit here of the terrain. And, within that ambit, finding a strategy that works isn't very easy. What's your sense of the evolution of banking that we're seeing on the continent right now?
I think Mohammed Yunus put it very well. He said the DNA and architecture of a bank, it's a formally, hierarchically process-driven organization that was designed to deal with formal markets. To expect this highly structured formal organization to cope with the chaos of the informal market may be a bridge too far. So I think the question should be, how do we encourage perhaps new entrants with different models, utilizing technology that Sven mentioned, to get to more remote areas, more rural areas, where the cost of a branch infrastructure is too high, destroys the revenue model. So how do we encourage new entrants within a regulated environment? That to me is the challenge.
And that nowhere more evident than in Kenya, I guess. Daniel, let's bring you in here, because traditionally all players used variants, of the same business model of serving well-off consumers, state entities, medium-sized and big businesses as well. And if anywhere, we've seen a player like Equity Bank in Kenya change that model on its head in a big way. It's an indigenous African bank that's really proved to be a strong contender against international players by tapping in to the unbanked.
Well, Alicia, I think that's correct, although I'd make one distinction, and that is that, they're a strong competitor in that space that you just described. And to your point about finding a strategy that works, I think it's important to note that, there are strategies that work that don't include being everything to everybody in Kenya. And for example, Citi and here and both in East Africa as well, we have stayed with the stuff we think we do very well. And in supporting the banks themselves, who are often clients, we are participating and benefiting from that inclusion, if you will, and from the rising middle class. But we see it through the markets that we continue to deal with. So I think there's a lot of different ways to go at an approach, and frankly, a large local bank, I think you would expect that they would be the ones that would be more taking advantage of their networks and trying to do much more of a retail and consumer strategy.
Yeah. Overall, though, to mitigate against the risk that comes with doing banking on the continent, it's that diversified approach, that's proving to work better than anything else, because you diversify your exposure.
Well, you do diversify your exposure, but I think that you have to, in terms of a banking conversation, take it even beyond what we would think of as in banks. And Kenya is very interesting in terms that when you look at something like M-Pesa, okay, where there's a demand for something. It might not be a traditional banking product. It might just be transferring money, which might develop into something else. And everyone can fulfill a space within it. While there's spaces for diversified banks, as Daniel mentioned, there's spaces for banks that provide services in a specific segment and are good at it and maybe have the linkages internationally, and the others that provide a specific service to a specific part of the population in any one country. And I think they all have a space to play, and they're all synergistic to each other as well.
Yep, you touched on it as well, Brian. The thing is that as you venture into banking the unbanked, increasing the scale of that sort of operation is pretty tricky, but then step in technology and the advent of cell phone banking.
Yeah, and I think that certainly impacts on your costs, it impacts on your sign-up processes, your acquisition cost, your client acquisition cost. And I think it's a realization that the road to financial access is not like a light switch. It doesn't happen like that. It's more like a ladder. And in fact, to bombard that market with a whole host of financial services and products can be quite intimidating. So it's to take it a step at a time. And I'd like to just support Daniel in his comment. Yeah. I don't know of a bank or an organization, for that matter, that has succeeded in being everything to everybody. And I think it's all well and good for government to take out the big stick to the big banks and saying you will, you have to, and you must. I'm not sure that they're capable of doing it, and we could have a very interesting debate about it. And I'm all in favor of special or specialized players for specialized markets and specialized niches where they've got some expertise and competence.
I guess that is becoming more and more of a realization, Sven.
Yes, well, but sometimes it's facilitation of government, not always a big step. I mean, because one of the things that government throughout Africa could do to facilitate a lot is to provide people with secure legal tenure to their land, because that would open up a whole banking sector that at the moment is shut because people don't have secure tenure to land that they can use to go and get loans. So there's other things as well which can just open it up in a huge way.
Yeah, as we see this opening up, Daniel, I mean, this playing field becomes increasingly competitive. How's this shifted the landscape over in Kenya, of course, being an operator within the banking and financial services arena?
Well, we've been here for 38 years, and so we've seen things change, obviously. What I find very interesting is the adaptability of technology by the unbanked that we talked about earlier. I think, when I first got here about a year ago and looked at what was going on in terms of the mobile payments, it was stuff that, frankly, I didn't see anybody doing in the U.S. And I think the challenge is going to be to not only keep it accessible, but to make sure that whatever regulatory restrictions are put on it sort of makes sense. I think the point was made earlier about someone with a relatively low income just moving a small amount of money. But as there's pressure to start upping the amount of money that can move, how do we look at the regulation of that and the tie between what is traditionally a telecoms market, who I don't think want to become banks, and banks who don't want to become telecoms? How do we mesh that so we can continue to not only increase the penetration, but perhaps the flexibility of those systems, but not kill them due to over-regulation, and yet make sure there are the right kind of safeguards around it? I think that's going to be the challenge going forward, not only in Kenya, but in some of the other markets as well that are quickly developing that mobile capacity.
Brian, while mobile banking is popular, most banks have yet to find a way to grab large amounts of profits from that strategy, and the challenge is making this lucrative. Just how much of a challenge is it?
For a small entity like Wizard, which is a relative newcomer, it's quite a big challenge, because you need the volumes, you need the mass market to get to those volumes, to get to the tipping point, to keep the transactional costs at a rate that is affordable. There's this weird perception in Africa, and I travel all over the continent, that cash is free. Now, I'm not sure where that perception comes from, but it's all to do, as I mentioned in the earlier segment, around financial literacy. And I guess it's because if I go into the store to buy a loaf of bread, I hand over my 10 Rand and I get my loaf of bread. If I use any other means to pay for that bread, be it electronic, be it card, there is an additional cost. So how do I get the transactional cost to be, perception-wise anyway, the same cost as cash? People forget very quickly the cost of getting that cash, of going to an ATM, the transport costs, and above all else, the security costs of cash. So the enemy in all of this is cash.
Yep, it's an education, and certainly it's an education that banks have been through as well themselves. EcoBank is a bank, Sven, that admits it was a bit too aggressive in its branch strategy, for example, bricks and mortar strategy. How do you weigh up the pros and the cons here? Because there are two sides of the coin with both. I mean, a physical presence and then this more pervasive presence in technology.
Well, if you're going to be a niche player and you're going to have certain niche operations, I think you can probably do it mainly electronically. But if you want to really move into being a full service bank, you do have to have some sort of physical infrastructure. You cannot just lay it out. And I mean, we've seen many banks where they said, okay, well, we will limit our physical infrastructure at certain points to just provide a sort of a transactional thing, where if you want more complicated things, you need to go to a central hub or something like that. So I don't think any full service bank at this stage in Africa, and probably in many other parts of the world, cannot have some sort of physical infrastructure, because you're still required to go there and sign a form sometimes or do something.
And Daniel, and that becomes also imperative where you've got many banks with a regional agenda now. I mean, we've got various strategies at play within that context of enhancing a regional footprint, one of going into loan, greenfields operations, and that versus a strategy like Nedbank here in South Africa are pursuing a joint venture type of strategy with EcoBank, that's more collaborative. What are you making of the kind of stride banks are making in or with regards to expanding their regional footprint?
What has to happen in order to really provide the services that, say, the client base that we deal with needs. Now, the thing I would challenge is, though, that doesn't mean we need to have a huge branch network in any of our African countries to really serve the, the corporate clients, the multinational clients, governments, and other financial institutions. And the advances in technology, the access that we can give clients through electronic banking, I think it kind of obviates the need to absolutely invest in a large retail brick and mortar type network for the corporate business. And I think the trick is going to be, how does that play out for the banks that do want to really expand their consumer businesses? Right now you are seeing a lot of brick and mortar investment, whether that continues to be profitable or they can use technology a little better to perhaps cut that back. I think that's the way the landscape will kind of shape itself out over the next few years.
Sven, collaborative efforts versus greenfield operations. I mean, which one wins at the end of the day? Can you have a decided winner here? Because so far, if we look at the financial performance of the collaboration between ICBC and Standard Bank, it's been disappointing to some. Some say yes, the love bomb tactics have created a strong brand recognition in the Middle Kingdom, where Standard Bank is now known as the Africa and Mining Bank. But you've got to know how to make these alliances work for you.
Even people who know that it's different countries make the assumption that every country in Africa is the same. And even countries that share sort of a predominant language like English compared to, say, the French-speaking Africa, there are very big differences in those countries. So every country requires its own approach, and then every market segment within that country requires its own approach. And I think both of those are good strategies given being an answer to something, but one will not fit all. So, one bank in one country will be going greenfields, and one bank in another country we're looking at collaboration. I mean, just if you're an international bank coming into the market, for instance, and you want to do government business, you have to say, well, we can bank government or corporates at a certain level, but when we deal with the paycheck that we give to all the end employees, they need some way to access that on the ground. Now, will they accept a debit card for you, or do you need a collaboration with a local bank with branches or not? So there's a lot of different things that you'd think of when you're opening up a bank.
Well, unfortunately, gentlemen, we've run out of time. Never enough time to get through all of the aspects of investing in a particular sector on this entire continent.